Since the March 2020 stock market crash, risky assets have significantly outperformed all other assets. The principle of high risk equals high reward is well known, but the returns have been astronomically higher than what is usually observed. A few examples of the gains since the March 2020 lows for risky assets are MGM, up 380%, Tesla, up 1,080%, NEO, up 2,280%, Bitcoin, up 590%, and Ethereum, up 1,250%. There are many more examples that could be given, but why have risky assets done so well? At its simplest, an asset traded in the market will go up in value when there are more buyers than sellers. This is supply and demand. So, these risky assets have been having a massive influx of capital going into them, but why? This video will look at the capital asset pricing model to help understand what is causing significantly higher investment into risky assets relative to what is typically seen. To understand the capital asset pricing model, we must first understand what an asset's beta is. Beta is a measurement of how sensitive a security is to market movements. The market has a beta of 1. A stock with a beta of 1.5 will on average move up 1.5% when the market moves up 1%, and move down 1.5% when the market moves down 1%. Similarly, an asset with a beta of 0.5 will on average move up 0.5% when the market moves up 1%, and will move down 0.5% when the market moves down 1%. So, stocks with a beta greater than 1 tend to amplify the market's overall movement, and stocks with betas between 0 and 1 tend to move in the same direction as the market, but not as far. In the capital asset pricing model, beta signifies risk, so the higher the beta, the higher the risk of the asset. It should be noted that cryptocurrencies cannot accurately be given a beta. This is due to them having very little correlation to the market's movement. While mathematically you can calculate the beta, the value of the beta will vary radically depending on the data you use, so it cannot be done accurately. For the capital asset pricing model though, as crypto is seen as a high risk investment, we will assume it has a high beta value for the model. The capital asset pricing model describes the relationship between systematic risk and expected return for assets. The security market line shows this. The security market line starts at the risk-free rate. This is the rate given by government on short-term treasury bills. Before the March 2020 market crash, this rate was around 2%. You can see the market portfolio has a beta of 1 and the expected return for the market is around 7%. Investors chasing a higher return in the market will need to invest in higher risk assets, meaning they have a higher beta. Remember, a higher risk needs to be taken to get a high reward. In March 2020, as a result of the market crash, the government slashed the rate on treasury bills, which have stayed rock bottom ever since, getting as low as 0.01%. This drops the security market line on the capital asset pricing model. This means that if investors want a similar return to what they were previously used to, they need to invest in riskier assets. This explains why more money has been flooding into riskier assets since March 2020, causing considerable gains in market prices. This is demonstrated perfectly by Invesco's S&P 500 High Beta ETF, that since the March lows have over 150% in gains. The capital asset pricing model suggests that when treasury bills rates increase back to around the 2% mark, it is likely that risky assets will stop receiving such a huge amount of investment and go back to the return that they were getting before the March 2020 crash. It has, however, been suggested that interest rates will stay low until 2023. Do you think that we will continue to see the crazy returns on risky assets until then? Let me know in the comments what you think, and comment what risky investments you have in your portfolio currently. Thanks guys for watching till the end. If you enjoyed the video then please hit the like button for me. Doing so helps out the channel so much. If you want to see more finance related content like this, then hit the subscribe button. I will be posting videos at least once a week to the channel. Have a good rest of the day and I hope to see you back on the channel in the future.